Welcome to the Bogart Effect, a wealthy wisdom podcast. Please see important disclosure information at the end of the presentation.
Compared to some of the implications in the future. And a lot of that's driven by required minimum distributions.
Right.
And for anybody who doesn't know, when you attain the age of either 73 or 75, dependent upon what year you were born, so 1959 or sooner, your RMD age is 73, 1960 or later, it's 75. But you're required to start taking money out of these retirement plans. And so for a lot of our households that are fortunate enough to have large pre-tax accounts, IRAs, 401ks, pension, lump sum options, et cetera. Well, they then will have a material implication associated with when they turn that required minimum distribution age, where they're forced to start taking a percentage of the funds out. Right. And that's where this tax planning work is so important early on. And again, it comes back to this whole point around integration with the plan as we're looking at 2026 and beyond.
Yeah. And when we talk about required, it's we're penalized if we don't take it, right? So it is, to the sense of it, it is required that we meet those standards set by the IRS.
Yeah, and that's another change that happened with the Secure Act, but it moved. The penalty on not taking a required minimum distribution used to be 50%. Now it's 25%, but that's still a heavy number. 25% penalty plus the tax on the required amount that you have to take out. So. Right. RMD planning is something that I also like to do this early on in the year for any of our clients that are now of those age. We'll look and see how are your cash flows. Are they going to satisfy the RMD? If they're not, then we need to have a conversation around optimization, timing around that. If we're going to look at doing things called qualified charitable distributions, that's another thing that got added in and clarified with the Secure Act. So that's not necessarily new for 2026, but you can do, if you're over the age of 70 and a half, you can do a charitable distribution directly from a retirement plan of IRAs or any other type of retirement plan.
The previous presentation by Bogart Wealth was intended for general information purposes only. No portion of the presentation serves as the receipt of or as a substitute for personalized investment advice from Bogart Wealth or any other investment professional of your choosing. Different types of investments involve varying degrees of risk, and it should not be assumed that future performance of any specific investment or investment strategy or any other non-investment related or planning services, discussion, or content will be profitable, be suitable for your portfolio or individual situation, or prove successful. Neither Bogart Wealth's investment advisor registration status nor any amount of prior experience or success should be construed that a certain level of results or satisfaction will be achieved if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Bogart Wealth is neither a law firm nor accounting firm, and no portion of its services shall be construed as legal or accounting advice. No portion of the podcast content should be construed by a client or prospective client as a guarantee that he or she will experience a certain level of results if Bogart Wealth is engaged or continues to be engaged to provide investment advisory services. Copies of Bogart Wealth's current written disclosure brochure and Form CRS discussing our advisory services and fees are available upon request or at www.bogartwealth.com.